Hello and welcome again to another edition of the 12 Days of Crop Insurance. I'm your host, Ben Spirk with Jones Bank, and today we're going to take a look at what we do with CRP ground that's emerging for the next crop year. So when we're talking about CRP that's emerging for this next crop year, there's a couple questions we first have to answer. Is this new ground to your farm operation? Is this a new crop in a new county to your farm operation? And is there any history that we can utilize? So let's say all those are no, okay? Basically what we do then is we're gonna have to set up a new database, which is basically your production history for that entirely new field and make sure it has its own unit. From there, we can make sure that we note that it's added land and that you're a new producer of that crop in that county. It gives us added benefits when we use that T yield. It allows us to use more of the T yield when we set up the guarantee for that field, which gives us the ability to increase the liability for it. But let's say that all those are yes, actually, and it is ground that you've previously farmed and you actually have history on it. It becomes a much more streamlined and straightforward process then. All we have to do is review the history off that field in terms of production, make sure there's no errors, then make sure that we get it added back into the new database or the APH history if we need to, or if we need to set up a whole new unit depending on whether or not if it ties into any existing ones. And then from there, we just make sure that, like I said, everything's accurate with the production history to make sure that we are getting the best that we can in terms of the approved yield off that field for liability come spring planting season. So thank you again for joining us on another edition of the 12 Days of Crop Insurance, where we discuss CRP emerging for this next crop year. I'm your host, Ben Spirk with Jones Bank, reminding you to be well, live well, and insure well.